All right, YouTube, welcome back to episode 2 or 3 if you count the introduction, but this is episode 102 or lesson 102 of the 2026 CCT Mentorship. Now, if you're hopping in this video as your first one, I would encourage you to go back and watch the introduction and the lesson 101 explaining what CCT is. This video, though, is going to be how to do the CCT chart setup. I'm going to go over the two time frames that you're going to be using. I'm going to go over the asset that we're going to be using, which is gold, which is what this whole mentorship is about. It's about trading gold. And then in the session of Asia, which is 8 p.m. Eastern Standard Time. I'm not going to name names, but there's someone, I've been in the industry for a long time, trading for over 5 years. I've gotten highly connected, and I want to say this. I'm not going to name any names, but there is someone that learned directly under ICT. ICT taught him himself, and this individual and I got connected a long while back. And he spent hours with me on calls, and this guy's made millions of dollars, has an extremely deep understanding of just the algorithms that drive the market, so on and so forth. Whether people think that there's algorithms that drive the market or not, this guy has that belief, and with that belief, he's been able to make millions of dollars trading. And one day he sat me down, and he was talking with me, and he's like, "What are you trading?" And I was like, "I'm trading Nasdaq." And he's like, "When are you trading Nasdaq?" I'm like, "I'm trading Nasdaq, after the open. Obviously I wait a little bit for the open to settle." And he was like, that's your biggest problem. He's like, if you and he's like, quite frankly, he's like, I trade Nasdaq too during the New York Open. He's like, but if you really want to start scaling your trading up at a faster rate, at a very consistent rate, and at a very high level, he said you need to be trading gold during Asia. He said if you're trading gold during Asia, that is when the market is going to move more like it's supposed to move than any other time of the day and any other pair. So gold in Asia is the highest probability of success, in my opinion, based on the things I've seen and based on my experience in trading it. It is my most accurate setup. That's why this whole mentorship is going to be around trading gold in Asia. It is my most accurate. It is obviously his most accurate. And there's something to be said about the money to be made trading gold in Asia. You're not going to get whipsawed like you would by gold in New York or NQ in New York. A whole lot more manipulations going on, a whole lot less unpredictability. Like it's not as predictable. And what you will find, and what you're going to find in this mentorship, is that gold during Asia is a secret gem. It is the bread and butter of really, if you want to get out all of the noise in your trading and you want to focus on one thing, it's going to be trading gold in Asia. Now, obviously, this mentorship is going to show you how to do that with the framework of CCT, candle continuation theory. But having that knowledge set aside now, knowing that we're trading gold during Asia, which is 8 p.m. Eastern Standard Time, and we are going to be using two time frames. A lot of people say that you need more than two. You need like to go through the monthly, the weekly, the daily. The Yes, you can understand those things for context. Yes, when I trade forex on the higher time frames, I always want to know what the monthly and weekly are doing. When you're trading gold in Asia with the 1 hour time frame and the 1 minute time frame, you don't really need much other context. I'm just gonna say that. You're going to want to do as good trading's not adding more, it's subtracting a whole lot more. So if you can take out all of the extra stuff that you're doing that actually doesn't contribute to the bottom line with this model, with this framework, get rid of everything except the 1 hour time frame for your higher time frame and the lower time frame only being your 1 minute, and then trade gold in Asia, and you are going to have everything you need to set up the charts at this time. So now this actually is gold at 7 p.m. on the 1 hour time frame, and I'm going to show you guys exactly how you can set up your charts and exactly how CCT works. Now, obviously, we're going to go into the turtle soup framework too and other things that are going to be added to this, but I want to show you the bare bones of CCT on what it would look like for you just to set up your chart with CCT when you approach 8 p.m. Eastern Standard Time in Asia. Now, we're going to do other examples as well when we do the turtle soup and whatnot, but imagine it's 8 p.m. right now. This candle just closed the 7 p.m. to 8 p.m. 1 hour candle, and you're coming to your charts on your 1 hour time frame and you're doing analysis. You've sat down at the charts probably a little bit before 8 p.m., but you're over here and you're looking at where the most recent candle close is. That is the first question you are asking yourself when you are setting up a chart for CCT. Where is the most recent candle close? Obviously, this is the most recent candle close. And what I mean close, I mean close beyond another candle. This candle closed beyond this candle right here. Obviously, if you go back in time, you don't get any closures beyond anything until down here. This candle was the most recent one until this one happened. So right here is where you have a closure and a breakthrough. We'll make this in bright red. And if you go back in time, you don't have anything else until right here. Now, we're only looking for the most recent. Obviously, this is the most recent. And now you are not just trying to see which candle it closed through just being the last one. Did it close through any other ones as well that had not been touched? These are 2 points that had not been touched, but they did not get closed through by this candle. So obviously, the only line you're going to draw is the line of the candle or candles that price closed through. In this case, this is just the cleanest example. This candle closed beyond this candle only, and that is going to be your break of structure. That is going to be the line that you want to retrace to. So now that you've identified the most recent candle break, you need to understand this as well. And I talk about this in lesson 101. Which directions are the candles breaking? You want to make note of that. Obviously, this candle's closing higher than this candle. We are only going to be looking for longs now until candles are closing lower than other candles. We don't have that though. We have no reason to short. We are only looking for longs. 1 hour candles, our higher time frame candles, are closing higher than other candles. Our bias is bullish. We want price to continue higher. Now, that being said, what are you waiting for next? This is as simple as it gets with the chart setup. You're using your higher time frame to identify these lines. Once you have these lines, what are you waiting for? You're waiting for price to pull back below it and then to get back higher. That is your area of entry. And so I'm going to show you now on the 1 minute. You have this picture on the 1 minute. So instead of trying to guess, are you trying to get back above this high or this high or this high? Or actually, are we in a downtrend now that we broke this point? You don't have all of that noise. Obviously, it would be a little difficult if you took this away to see, hey, are we about to go higher or lower? You don't know. And where are we going to go higher or lower from? Having this point of interest and knowing that you're bullish takes all that noise out, because now this is what you're seeing instead of everything else, all that noise that the 1 minute creates. And so what you're waiting for is obviously a pullback below and closure below this line. That's the very first thing. 8 p.m. you can see the gray background starts to kick in. That is when our session kicks in. Price closes back below our point of interest. Once price closes inside of here, we have accepted this range. We have got back below here and we have accepted this range. Now, what you have, now that you've accepted the range, you are basically looking back in time and you're seeing, if we break out of this range again, if we break out and close above this range again, where are we going? Well, obviously, this is the highest point that we just came from. This is going to be your liquidity. And so now that we've pulled back inside of here, now we've drawn on our liquidity. This is the next part of your chart setup. This is where price wants to go. If we get back above the red line. If we get back above the red line, price is attracted to, with extremely high probability, this line up here. This is your draw on liquidity. Now, what you're going to do, and I know in the past with our Forex trades, you obviously have, a little bit more confluences. You got an inversion fair value gap. You got, you're waiting for like a candle range flip. The only thing you're waiting for when you're trading the 1 minute in gold like this, the only thing you're waiting for is a close back below the range and then a close back above. You don't need any type of confluence. You don't need an inversion fair value gap. You don't need a change in candle ranges. We're on the 1 minute. We're trading gold. All you're looking for is just price to accept the range again and then to break out of the range again. As soon as price breaks out of the range again, you put your stop 5 ticks behind here. And I'm going to go over different risk management strategies and money management strategies in the rest of this mentorship. So obviously it's not going to be just a set and forget like this. There's going to be so many different ways you can run it, but this is the CCT chart setup. Overall, this is basically what you're trying to identify, what you're trying to see, and then once price gets back above this red line again, where is it most likely to go? It's most likely to run the draw on liquidity up there. And that is basically the CCT framework. I've said this before, it is so simple. It is such a clear picture. It gets rid of all of the noise, and it shows you, if you were to look past all of this noise right now and you were to take the here, I'm going to do this. You guys are going to love this. It's going to be brilliant. You're going to be able to see that this is the picture that you're getting. Let me take the candles off for you. That way you can actually see what I'm talking about. The candles are hidden. Now this is what you're seeing. This is how you're trading. You are trading with the trend properly. You are seeing the markets the way they're supposed to be seen. But look at, if you were to take this off, you might not have ever seen that with just these candles, right? It's a whole lot harder to see that when just looking at this noise here. And so that's the CCT framework. That's how you can trade. You use the higher time frame with which direction candles are breaking like this to scale down to the 1 minute and to take trades on the 1 minute with high success, high probability, high win rate. And that's the whole picture right here. This is CCT. This is using candle ranges and finding which direction candle ranges are closing, hence the name candle continuation, so that you can continue which direction candle ranges are closing. That's why it's called CCT. That's why it's called candle continuation theory. You're continuing the direction candles are already breaking and closing and going. So that is the chart setup in its simplest form. That's what you're going to basically do when you come to Asia session at night. You're going to basically look for that. Obviously, there's going to be different things you can do when it comes to managing the trade. You can set a flat 1-to-1, which with scalping, just so you know, I'm going to hint at it now, but I'm going to go into greater detail later. 1-to-1s when scalping the 1 minute is my bread and butter. Even though I know price is going all the way up here, and I know that that has the highest probability and there's a magnet on it, 1-to-1s will change your life. There's going to be so much talked about 1-to-1s when you scalp the 1 minute. The higher time frames, yeah, you could trade 1-to-1s. I still do sometimes. But when you're trading off daily levels, sometimes weekly levels, sometimes monthly levels, let the trade ride. You're going to catch the higher risk to rewards like all the time on the higher time frames. It's not going to happen as much. But if you can't on the 1 minute, obviously the full liquidity has got the highest probability of getting run. But what we're looking for is, we're not necessarily looking for high risk to reward trades. We're looking for prices where we can flip a coin and have a magnet on our coin. There's going to be a whole video about that as well. I feel like I'm going into too many other things. I'm kind of rambling at this point because all of the other stuff that I'm kind of hinting at right now is going to be unpacked in the rest of the mentorship. The whole point of this video wasn't to talk about risk management, money management. I'm going to do that in a whole separate video coming up. This is the CCT framework. This is exactly how you set up your charts, exactly what you're trying to see, and exactly how it actually plays out time and time again. So I love you guys. I'm going to see you guys on episode 103. This concludes lesson 102 of the CCT 2026 mentorship. Guys, like, comment, subscribe, and share this with everyone else that you know that trades. That way they can get all this free value too. This is a free mentorship, and I absolutely love being able to put this out for you guys. So I'll see you on the next one, and thanks for watching.